Welcome back, Fintrospectors. I hope all of you are staying inside and staying safe. So, remember that time when we used to get into our car, drive to the nearest fuel station, and stay there in queue for hours just to save a couple of bucks? Whenever government would raise prices of fuel, that is, I think, what is done everywhere. Now, imagine this: you get into your car, you put the seat belt. Yes, safety is important. You drive to the nearest fuel station, you get out of the car, you get your car refilled, you take your money, and then you leave. Yes, I didn't make a mistake. You did take your money back. That is exactly what has happened on 21st of 2020 when WTI, which is West Texas Intermediate, crude prices there went up to minus $40 a barrel. If I get my maths right, for 1 barrel of crude oil, which is like mother of petrol or diesel that we put in our cars, you get somewhere around 3,000, 3,200 rupees for 1 barrel of crude oil. You get crude oil and you get this money. That is exactly what has happened. So before we get into this funny situation, let me tell you a bit about what exactly happened. So on 21st 2020, when WTI future crude was trading, it went up to minus $40 per barrel. The term is futures, and just to give you a brief about futures, so it's something like in order to protect your future, you basically fix your prices right now so that whatever is the volatility in actual price, you do not get impacted by it. So just to give a very simple example of it, if I want to, let's say, buy 1 kg of wheat, and current prices is, let's say, 50 rupees a kg, and I'm not sure what I will have to pay if I have to procure wheat 1 month in future. So I see that, okay, 1 month future price of wheat is at around, just again a hypothetical situation, it's at 55 rupees per kg. So I buy it at 55. I do not get the actual wheat right now because I need it 1 month in future. So when 1 month gets over, at that time I get wheat at 55 rupees irrespective of the market price at that time. It might be at 58, it might be at 53, it even go down and probably it's at 47. So that is what future is. You basically protect risk in this case, and you buy a product in advance. So that is exactly what was happening on WTI index as well. That crude oil trading went up to minus $40 per barrel. Why did that happen? Because this is something which has rarely happened in history, that crude oil has been trading at negative. So someone is basically paying you $40 per barrel that please take the crude off my pocket. I don't need it. Just take it from me. And the reason is coronavirus. Yes, the virus which has infected almost 210 countries till now, infected millions of people globally, that same virus has led to this disaster. So because everywhere there is a lockdown, all the economic activity has come to near halt right now. So the demand of crude has dropped substantially, because crude being a raw material, getting refined and getting refined as petrol or diesel and then getting utilized for logistics, travel, etc. So all that has come to a near halt now, and the demand for crude has come to almost zero. Because the demand has come down significantly, no one needs crude now, and when no one needs crude, I am just ready to give any money, but I do not need crude right now. But still, I think the simple question is that why would I pay someone to take crude from my pocket? Why? Even if I sell it at, let's say, zero, I'm sure people would be ready to take it, right? But why minus 40? So the reason why it went up to minus 40 is, to understand a bit of it, I'll just give you a brief understanding of what WTI crude is. So globally there are basically two kinds of crude. This is a very, very generic and broad understanding. One is Brent crude and one is WTI. So Brent is basically which globally we are aware of. It is drilled in sea, crude is taken from there, it is put on vessels, and from vessels exported all along the countries. So that is what Brent crude is all about. Now WTI is basically another form of crude which is very much domestic in US. So a lot of US needs are met by WTI. But if I look at the overall basket of crude, then WTI is not a major one. But US being US, the trade market in US is very strong, and the trade market of WTI is actually stronger than crude. The reason it went negative was that this WTI future contract, when the time hits, when a month gets over, so you have to procure the crude then. Okay, and this drilling of crude, this is not in sea, this is in land. Within land the drilling is happening and crude is getting extracted. So there's a small place near this drilling factory where almost 10,000 people are there, and it has got a huge storage space. But right now, when demand has dropped substantially, almost 70% of this storage space has been filled up. And this futures contract, you need to take the delivery of actual commodity. So you take crude with you. That's the only way you can settle this futures contract. Okay, so because you have to take the crude, and the place where this crude is getting drilled, almost storage space is getting occupied. Storage prices are going up substantially. So if you look down, you can see the equation that how future prices are determined. So broadly, future price, as I think logically we can understand, it depends on the spot price. What is the price at which I can probably get crude right now? So that is obviously the first parameter. Then the second thing, as you can see in the equation, is storage cost. Storage cost is getting added in the futures contract. So if the cost of storing crude is high, then my future price will be higher, because now if I imagine myself as someone who doesn't have crude right now, okay, I need it from 1 month, in 1 month from today, so I do not have to pay the storage price. Because I do not pay the storage price, so it basically increases the future price. And the final leg is convenience yield. Convenience yield is that if I had crude right now, I could have consumed it, I could have sold it, but I am letting go, foregoing this benefit. So this benefit basically decreases the future cost. So that is how I can determine the future price of a contract. But when I come near delivery, when almost the future contract is about to end, so at that time, basically this equation starts behaving differently. Now I have to pay the storage cost. Okay, and storage cost in that region, as we just discussed, it has shot up significantly because of limited space available right now and no visibility of demand offshoot in near future. So storage price goes up significantly, and because I have to pay it now that decreases my future cost. So from plus, this changes into minus. So this basically, this part of the equation led to decrease in futures contract. It went to minus 40 because the storage cost in that place has gone up so much that I'm ready to even pay you $40 but not take the crude. Now I think a very logical follow-up question is that can it happen with Brent as well, or can it happen with WTI futures contract next month? So for WTI futures contract next month, yes, it is still a possibility. With no respite from coronavirus and economic activity still at a very slow pace, it can happen again. But in our sense, now investors will be more conscious. They might try to hedge their investments and not take that kind of risk, that at last minute they are just doing panic selling. Because when the price is going negative, that is definitely a case of panic selling. I am just panicking, I am just selling it. I don't care the price, I am just selling it out. That's why it went to minus 40. So that is what we feel that can happen in the coming futures contract. And if I talk about the Brent, which is basically most of the global trade of oil, if I talk about Brent, then Brent futures contract is different. In futures contract of Brent, I am not obliged to take actual oil. I can just settle it through money. So if let's say I bought futures contract at Let's say again taking this example of wheat. So if I bought the futures contract of wheat at 55 rupees a kg, and right now wheat is at, let's say, 45, so I don't have to take 1 kg of wheat and pay 55. I just pay the difference. So 10 rupees, that's the difference in today and what I had to procure the wheat at. So I just pay the difference, I pay the cash, and I'm out. So I book a loss of 10 rupees per kg and I'm out. I don't have to take the wheat. So that is how Brent actually trades. In Brent, you do not take oil directly, because that a delivery of oil is not there. So the panic selling in Brent might not happen. And Brent, even the day when WTI went to -40, it was close to 20 or 22 dollars a piece. So it was still holding strong, although very down from, if we look at 52-week high of Brent, it's still very low. But even then, it was keeping in positive territory and staying strong. It didn't fall that significantly as WTI futures. The only reason being that in Brent you do not take delivery of oil, but you can just settle in cash. So I hope all in all this gives you a fair understanding that what happened in US and why you went to a petrol pump, you got the fuel done, and you took your money and you actually left. Stay connected, stay safe, and subscribe to this channel. Hit the bell button, like, comment, and share so that we can understand what you need, and future videos can be accordingly. Thank you so much. Take care.